Hey everyone, welcome back to another hardware news recap for the week. In this one, we're talking about Softbank, one of NVIDIA's biggest investors selling out its shares. Thermaltake legally posturing against Mayhems, the liquid cooling manufacturer, competing liquid cooling manufacturer. Gigabyte might be laying off some of its workforce, it looks like, and NVIDIA also seems to have not known or not shown the true impact of cryptocurrency on its revenue, because it was looking significant based on some new financial reports. And then there's also updates on Intel's Oregon expansions, Zen architecture driving market share growth for AMD, and Adobe, alluding to ARM processors. Before that, this video is brought to you by us and the GN Store. We recently added a modified disappointment shirt that we're calling the GPU Artifacting shirt, designed with XDs and Space Invaders you'd get in real GPU artifacting. We also have our critically acclaimed PC building mod mats, GN Cobalt Blue beer glasses with gold trim, and black and blue lightweight hoodies for cool weather. Go to store.gamersnexus.net to pick something up and support GN today. So first up for this week, Softbank selling its shares. Back in December, we mentioned one of NVIDIA's biggest investors, Softbank, which had about a $3 billion stake, $3.6 billion in the company, was looking to get out. And this was December. This is no longer a consideration because the sale has gone through at this point. So in third quarter 19 earnings, Softbank said that it sold its entire $3.6 billion investment, finalized on January 10th, which is sort of another blow to NVIDIA in what's been a turbulent past couple of quarters here, some of which has been due to cryptocurrency fall off and others due to product launches. On our previous episode, we detailed NVIDIA's struggle with slow RTX sales and the continued decline of its fourth quarter revenue guidance. So NVIDIA has been struggling in China, as have a lot of tech companies at this point. NVIDIA has also had issues, of course, with its RTX launch, with Pastel still flooding the market at the time it launched. It's mostly gone now, though. And the company is dealing with the consequences of going pretty much all in on cryptocurrency. We'll talk about that last point more in a moment. For the next news item, though, Thermaltake is legally posturing against Mayhems. Friend of the site VSG, one of the writers over at Tech Power Up, just published a piece on a brewing legal dispute over the usage of Pastel as a name for cooling products. Essentially, this boils down to every coolant company in the industry, EK, Thermaltake, and AlphaCool included, all wanting to use the same word to describe their coolants of pastel colors, despite Mayhems technically being the first that we know of and having a trademark in the UK. In two of those instances, Mayhems granted EK and AlphaCool permission to use the Pastel name. In Thermaltake's situation, Thermaltake is insisting that Pastel is a generic name and should not be trademarked, and so seeks to challenge the requirement of permission in order to use the UK registered trademark, or likely trying to invalidate it. Now, international legal battles are expensive and difficult, especially for the smaller of the two companies. So we'll see where this goes. The obvious first choice for any sort of dispute like this is to reach a reasonable agreement between two parties, a settlement, before going to any kind of legal proceedings. As we understand it, Mayhems did reach out to Thermaltake and did try to reach an agreement. Thermaltake has apparently not responded in any meaningful fashion. VSG and Tech Power Up also reached out to Thermaltake for comment on this story, and Thermaltake did not provide one at time of filming our news recap anyway. So what happens next? Well, Mayhems posted a comment on the story and did state that the UK registered trademark relates specifically to coolants and chemicals for cooling, responding to some comments that were questioning whether the word pastel, which is, to be fair, a generic word, should really be trademarked. And their defense was, well, we want to trademark it for this specific use case, and that was sort of the defense for that. So by this reasoning, it is inherently non-generic as it's trademarked for a specific product or use case. Mayhems reportedly made several offers to Thermaltake to license the name, including one that asked Thermaltake to make a £100 donation to charity in exchange for the ability to use that name. So this is where it's almost like a mind games play here, because if Thermaltake says no or rejects that offer, then Thermaltake just kind of looks like it's being a dick. If we're being honest, it's not really a good move ever to say, you know what, we're not going to give money to charity. Take that. At the same time, though, it is reasonable, potentially from Thermaltake's positioning, to say no if Thermaltake believes that the trademark is invalid, because saying yes to this offer, although it would be good publicity for everybody, it would also probably indicate that the trademark is valid. It would be a legal statement, effectively, from Thermaltake saying, we will give this money to charity and license your trademark, thereby acknowledging the trademark is valid. So it's an interesting play from Mayhems. It's kind of a good play from a mind game standpoint and a publicity standpoint, because it really puts Thermaltake in that awkward position of, do you want to look extremely bad to the public but continue to reject the validity of the trademark, or do you want to just accept it and have good publicity for everybody, maybe even raise them on it or one-up them on the donation amount? So very interesting choices. Now, we'll see where this goes. VSG says this story is developing. Thermaltake does have a troubled legal past. Many of you are likely aware. Previously embattled with Case Labs, now defunct, and also accused several times of sort of lifting case designs for its own. So it's a troublesome spot for Thermaltake to be in once again. They keep finding themselves in this position, and that's probably a bad thing, because just in terms of public perception, it's not great. Now, Thermaltake is one of our advertisers, and it's sometimes very unfortunate that they're dealing with this while trying to run ads, because, well, I mean, they are now a controversial company. Thermaltake makes some genuinely good products. We do think the Core P3 is good. Unfortunately, obviously, we don't necessarily agree with Thermaltake's reasoning to continue to get into legal battles when it could just, for instance, pick a different name. Seems like a pretty easy way to sidestep the entire issue. There are other words than Pastel to use to name your product. Simple as that. So, Thermaltake's a very frustrating company in a lot of ways. Despite being an advertiser and going off script a bit here, Thermaltake does some things where it's like, man, the US team that we work with, it seems like you guys really want to make a good product. You're trying hard, but you're getting so much pushback from everybody else in the company. And then you have the legal team, I guess, which is a completely different group than the product team and the PR teams, that is also extremely aggressive and not particularly good for publicity, I guess. So it's whether or not Thermaltake is in the right on this one, and I have no present opinion on this, but I would be curious to hear your thoughts below. It does seem like, given the company's current controversial status, it would have been better to avoid the issue entirely by just, at least for now, using a different name. Just because, again, from a PR standpoint, Thermaltake's trying to claw back some ground here and some goodwill with the community, and this does poor things against that effort. So even if TT thinks it is correct, then maybe just challenge it another time when you have some more goodwill, I guess. So anyway, the result of all of this is that you should read VSG's article. It's a great article. It's a great write-up of the events thus far, and I believe it was an exclusive to Tech Power Up, so please read their article. We'll link it in the show notes below. VSG did speak with a number of retailers in the space and ex-Case Labs employees, and has some additional reporting and quotes from those vendors and retailers, what they think of this situation. The short of it is that many of the retailers are planning to refuse to sell the Thermaltake Pastel line in a sort of show of support to Mayhems for having been, well, first. And as many of you commenters can agree, that is the most important thing in the world, and also having a trademark on it. So that's where it stands now. Read his article for the rest. We are curious your thoughts as well. Please leave them below. I have no present position until we see this develop further, but my position, other than that, externally from this issue, is that I wish Thermaltake would be a less frustrating company, because they have some things that are just genuinely good, and then they do these really weird, screwy things that kind of overshadow the genuinely good efforts to the extent that people don't even care anymore because they're so focused on the legal embattlements and things like that. So anyway, next news item, Gigabyte could be laying off 10% of its workforce here. So in a recent report by Digitimes, which is typically ends up being accurate in just about everything it publishes, at least that we show here. So in the report, Gigabyte is allegedly looking to reduce fiscal expenses for 2019, primarily in its motherboard segment. And this is due to weak motherboard sales. So Gigabyte could be laying off 5 to 10% of its workforce, depending on how it wants to cut these expenses. Marketing expenses are also on the table for discussion, allegedly anyway. And Gigabyte's motherboard sales have been steadily declining since 2016. That decline is predicted to perpetuate throughout 2019. As such, Gigabyte is aiming for a modest 10 million units in sales for the year. Previously, Asus and MSI also acknowledged their own struggles with motherboard sales. And part of this is because of the well-documented Intel CPU shortage that has played really no small part in the wider impact of the industry. See our previous week's coverage for the look at how Microsoft is partly blaming Intel for a lack of Windows adoption as Intel CPUs have slowed down in sales due to the shortages. So back to NVIDIA, back to that first news item here. NVIDIA by now is no stranger to the sort of unforgiving headwinds in the market caused by cryptocurrency in general. The company, like AMD and others, did well last year and the year prior as a result of the crypto mining boom, but is now paying a bit of that tax for having invested so much. So post-crypto mining boom, NVIDIA has struggled significantly with lower revenue guidance, continually adjusting it. The most recent adjustment was a subtraction of about $500 million in expected revenue for the quarter. And part of this was a challenge due to excess Pastel cards in the channel that were produced to meet this demand, but the company's total exposure to the cryptocurrency market may have been more masked than let on, presumably to avoid a heavier stock crash or decline. So Royal Bank of Canada capital market analyst Mitch Steves said the following: "We think NVIDIA generated $1.95 billion in total revenue related to crypto and blockchain. This compares to company's statement that it generated around $602 million over the same period." According to Steves, no, not those Steves. According to Steves, total revenue for cryptocurrency should have been about $2.75 billion from April 2017, so we're going back a bit here, to July 2018. NVIDIA is speculated to have captured about 3/4 of that market, about 75% of that market, where obviously that would leave AMD with the remaining 25% of total revenue from the cryptocurrency market. So what this amounts to is that the company's had more of a stake in crypto than may have been let on. Steves cites AMD's recent earnings report as a source of credence to his theory, where AMD lowered its own Q1 revenue guidance to $1.25 billion, a 24% decline year over year. This implies that potentially AMD accounted for $234 million of crypto revenue in 2018, which would roughly equate to 25% of the total revenue, according to Mitch Steves. There's no real way to confirm these numbers, and this is a fact that the RBC analyst admits. That said, it should be taken with a grain of salt and not as an absolute. But either way, it is probably likely, or probable at least, that the companies did make quite a bit from crypto and blockchain, so it's not unreasonable to expect that they made more than perhaps was accounted for in the public reports and investor meetings. Part of this challenge is because it is, to be fair, difficult to differentiate between a user purchasing 6 video cards through Newegg or something. Is that for mining? Is that for a small PC building business? Is it for personal use when you're buying multiple cards? And reasonably, at some point, you can look at an order and say, well, that's for cryptocurrency. But then again, you can buy multiple cards for lots of things. It might be for a rendering machine or for perhaps some sort of distributing computing model, so distributed. So difficult thing to measure, but probably more than was let on. Intel's Itanium processors, if anyone remembers those, will reach end of life in 2021 in this next news story. So Intel announced that it's discontinuing the Itanium 9700 line of CPUs, codenamed Kitson, in 2021. The 9700 series, not that 9700, are the last processors on the market to use Intel's Itanium architecture, and the chips haven't seen a manufacturing node shift since 2010. They're still being fabricated at 32 nanometers. According to AnandTech, which has a great write-up on this, Intel's only customer using these chips is HP Enterprise, so the impact is likely to be minimal to the market. Once upon a time, Itanium was heralded as the future. as the industry was moving from 32-bit to 64-bit computing. Itanium was intended to transform the x86 architecture, but ended up being not very x86 capable. The VLIW, or very long instruction word, called IA64, was hard to optimize x86 code for. Around the same time, AMD's Opteron introduced AMD 64, its own version of 64-bit extensions to the x86 ISA, or instruction set architecture. AMD 64 was completely backwards compatible with 32-bit x86 code and software, so it quickly became the de facto standard and is one that we still use today. So it looks like Itanium is going to die out here. And further on Intel is at this point confirmed to be pushing its Oregon expansion that we've reported on the previous 2 weeks now. So this is pretty big news. Intel has confirmed its plans. It is indicating that the company plans to build a large third phase to their Oregon D1X facility. This is a fabrication plant, obviously based in the US. The third phase is expected to be similar in size to the previous 2 phases that were added, and its construction should begin this year, 2019. So Intel has been vague overall about the details surrounding the project, although several of them have leaked before official announcement and were then confirmed to be accurate. The company has notified approximately 50 residents of the Ronler Acres campus about the upcoming expansion. So according to the Oregonian, Intel says it, quote, plans to remain contingent on unspecified business and economic factors. So whatever that means, it's probably something. Either way, though, the company is planning to expand its fabrication facilities, and that is probably good news at this point, given the shortages recently. Zen architecture driving market share growth for AMD. This is one of our last 2 stories here, and probably one of the more interesting. In its recent earnings call, AMD CEO Dr. Lisa Su highlighted key points in the company's trajectory, such as reaching its highest profitability since 2011 now, and also seen accelerated market share growth. However, she didn't elaborate on the latter, so we'll have to wait to see more on that. Analysts at Mercury Research have released some data that better outlines those statements from the earnings calls. AMD currently holds 15.8% of the consumer PC market, and that includes desktops, which is a 3.9% gain year over year. It also represents AMD's biggest slice held in the desktop PC market since about 2014. When it comes to notebooks, AMD's adoption rate has been very slow, but the company is making some inroads. AMD has gained an impressive 5.3% market share year over year, thanks in part to Intel's inability to deliver chips to OEMs. AMD has been aggressively trying to invade the server space with EPYC, where Intel has been comfortably sitting atop the food chain for some time and will remain for some time. While enterprise and server clients are hesitant about investing in new platforms, AMD has seen some success with EPYC, especially with cloud service providers. AMD's server market share has gone from 0.8% to 3.2% according to Mercury Research. This growth has primarily been off the back of AMD's Zen-based products. And while Intel is still the dominant player, the numbers indicate that AMD is clawing back valuable market share in the desktop PC space and across some other segments of the market. Laptops to come, and working more with SIs or system integrators and OEMs also to come for Ryzen 3 or the Zen 2 architecture. So this is looking like some true competition in the CPU space finally, and a better back and forth volley of products. If you haven't really been in the industry up until recently, you missed the massive sort of lull in development as we were stuck with the same product from Intel year after year, while AMD continually struggled to make FX work in a way that was good and competitive. So it's quite a bit different now than it was a few years ago. Last one, Adobe, different A-named company. Adobe alludes to custom ARM designs coming up. At a conference, Adobe CTO Abe Parasnis alluded to a future interest in custom silicon for Adobe software. In a story by Axios, Parasnis is quoted as saying, well, quote, "Do we need to become an ARM licensee? I don't have an answer, but it is something that we are going to have to pay attention to." Parasnis went on to say that ARM does afford a model for a software company to package its technology much closer to silicon, while expressing Adobe's interest in AI, machine learning, AR, and VR. The CTO also stated that he believes the world is at the cusp of requiring more powerful hardware, and he believes ARM will be the future. The last point being actually interesting, and the previous point about the world needs more powerful hardware, really not that surprising. So now Adobe, which makes the world's most reliable software, can now make the most reliable, well, someone else will make the CPU, but they'll probably contribute, and that might not be for the best based on our experience with Adobe. So that's it for this week. As always, subscribe for more. You can go to store.gamersnexus.net to help us out directly. For example, purchasing one of our graph logo shirts, which is primarily obstructed by my hair. Or you can go to patreon.com/gamersnexus. We recently published a behind-the-scenes video and a Patrons Ask Jen over there. And thank you for watching. I'll see you all next time.